money. A lot of you want to make purchases and say, you know what, I want to find ways that I can use creative financing to make these dreams come true. So let me talk a little bit about, well, from the conversations I had, it seems like you already did your research on our speaker. But let me go through for those of you who have not done some of your research. Robert Beckman, or what could be called Bob Beckman, is president of Rehab Funding and general partner of Rehab Investments LP. The company was founded in 1999 and had been a leading hard money lender and construction loan company. 2003, Mr. Beckman has been a national speaker presenting at investor groups, clubs, associations, training seminars, as well as national brokerages on financing and real estate investing. As a national, so those of you who are not looking only to invest in New York, but outside of New York, as a national hard money lender, Rehab Funding is specifically organized to arrange funding for us, professional real estate investors and contractors, aka rehabbers. Rehab investors had funded over 1,500 loans totaling more than $80 million. I like to talk to anyone that could say something about, I was excited about $8 million. 800,000. $80 million. Mr. Beckman himself was directly responsible for developing the programs, marketing, processing, and underwriting criteria used to develop and practice Rehab Funding's business. Do you know how important that is? So without any further ado, because his resume is very long and I can keep on going, I will hand it over now to Bob Beckman.
Do you think I need the microphone?
No.
All right. Because I like to move and swing my arms and stuff, so I appreciate that. First off, I'm not sure I will live up to your expectations after that wonderful introduction, but I'll do it. So, let me ask you this. Who here wants to learn about more than just hard money? Who wants to hear about all different types of ways to raise capital? Okay. So let's take the shackles off and let's actually expand it out from there. Because the fact of the matter is that there are many different types of ways to raise capital, borrow money, and frankly, they all have their place. So we're going to try to, in a very finite, limited amount of time, to give you some really good tips and to start the process to look at raising capital in a whole different way that you've been doing so far. So with that being said, I ask you now, is anybody here somewhat concerned when you find properties that you're interested in about raising capital? Is anybody at all concerned about that?
Highly, highly.
So if I were to say to you that if I could help you to be able to raise capital in a much more successful manner, that this might be the most important conversation that you're going to have all year. Does that make sense? Yes. All right, so that's where we're going to go tonight. And hopefully I'm going to help you there who have spent much time learning strategies for marketing, for rehabbing, for selling. Has anybody here spent any time, effort, or money to do those things? Yes. Okay. A lot of hands. Who here has spent the same amount of time learning strategies to actually market for money? Nobody. That's the problem. But tonight we're starting a whole new chapter. Because the fact is, these are skills that you need more than anything. Hey, listen, it's wonderful to know what to do with a property, how to acquire it, how to find it, how to rehab it, how to sell it, rent it. Those are very important things. I'm not minimizing this, believe me. But if you can't raise the capital every single time, it's pointless. Okay? So, now if I can teach you these strategies, now all of a sudden, like a good real estate investor, now you've got a foundation that's built very strong. Okay, it's not built out of sand, it's built to last. All right? You guys are real estate investors. Would you buy a property that's not built on a solid foundation? No. Okay, same thing with your business. Not learning those skills leads to disaster. Now those houses don't look like they were built on a solid foundation, do they? All right? We're not going to go there because we're going to teach you those skills. And when you learn those skills, and to be able to raise capital, borrow money every single time. Oh my God. Those are two really good tips. So let's transition a little bit and talk about hard money, which is near and dear to my heart. Now, has anybody here ever heard that hard money is essentially an equity-based loan?
Yes.
Okay, I hear some yeses. Let me tell you that that's really not the way it is or the way it started. Hard money is as simple as this. It's for projects that are hard to get money for based on the intrinsic risk of the property, where the property is located, the types of repairs that are necessary, what have you. It's money that's hard to get, hard money. So it's as simple as that. So let's talk about what type of lender you're looking for and the advantages that hard money and private money really have over banks at this point. Number one, you want a lender that will do a short-term loan that doesn't constrict you to, or will restrict you to doing 30-year loans, right? Okay. And if you can avoid prepayment penalties, you're going to want to try to do that. Banks won't do that. Hard money lenders, private lenders often will. How about your turnaround time? Why is that important?
Because you have to do deals fast. You want to find a deal.
I actually have a better reason for it. Okay? The reason I think that you want a turnaround time is that's how you steal the property. It's a deal between you and the seller. I'll tell you what, you're going to drop your pants on the price because I'm going to get you your money quickly. Is that right? Okay. So if you're working with a lender, aka banks or whatever, and they're going to take 90, 120, how long do banks take to close these days?
Depends. 45.
Forever? Okay, you get the point. All right, again, the minimum loan size. A lot of banks, they want large deals, okay, large commercial deals. They want these properties that are rented out already, 80%, loan back. It's just not what you guys generally are looking to do. How about fear of construction loans? Are banks okay with construction loans on properties, distressed properties?
Sometimes.
Mostly not.
Barely.
Okay, right. How about private lenders? A little bit of a trick question. Depends on the private lender. Right? Some are familiar with them, with repairs and distressed properties, and they're okay with it. Some, you would show that, that property to the kind that you see opportunity in, their jaw will drop and they'll run from you as fast as they can get. Far away as they can get. All right. How about hard money lenders? Now, hard money lenders typically expect distressed properties and expect construction loans. It's an important thing. All right, creative and unique financing. You're not going to have too much success with a bank, but sometimes you can negotiate different terms with a hard money lender or a private lender. Okay? Deferred terms in exchange for maybe higher payments. There's all different types of ways. Guys, you're going to have to be creative, and you're going to have to suggest to your lenders. Again, bank is not going to bend. Other lenders might. How about this? Reporting to the major credit bureaus. If you borrow from a bank, you will always be reported. But if you borrow from a hard money lender or a private lender, more often than not, they will not report you to the credit bureaus unless there's default. How awesome is that? Okay, your credit. If you don't have as much debt on your credit, boy, there's a lot of freedom that comes with it for your real estate investors. And then, of course, and this was brought up earlier by either Teresa or Natasha, I don't remember, but you might want to buy a property in the name of a corporate entity. And it was raised earlier, that's really hard for the bank, and it is. But private lenders, hard money lenders, they're more willing to do it. So, can we talk about pricing? Okay. I give this range here for hard money lenders and private lenders. You might know of a hard money lender or a private lender that is actually outside of that box, higher or lower. Okay, I'm trying to do a realistic range because I'm not trying to paint anything but the most realistic picture for you that is possible. So, the average hard money lender or private lender will charge you 10 to 20% per annum. Is that a lot of money?
Yeah.
It depends.
Maybe. Maybe. Because how long are you going to need that money?
Short term.
Under a year.
If you're talking about a 30-year mortgage and somebody offers you that, they're crazy. But if you're going to be out within a year, even a year and a half or whatever, the fact is, the interest rate is high. The amount of interest you pay is relatively small because of the short-term nature of the deal. All right, points. 5 to 10 points. Yes, can you find somebody lower? Maybe. But 5 to 10 is very, very typical. Is that a lot of money? It's always a lot of money. You're right. Yeah, it's a lot of money. But is it worth it? I mean, that's the question here. Is it worth it? And that's where you guys as real estate investors, the professionalism that you bring, the lessons that you learn, that's where it comes into play. The fact of the matter is, on any property that you are potentially willing to buy, you're going to do a full due diligence, correct?
Yes.
You're going to add up all of the costs that you have, including your loan costs. And then you're going to figure out, based on your either your cash flow basis on a monthly basis, or on your return from a flip. Whatever it is, you're going to figure out what your profit is, what you put into it, and it's either going to work or it's not going to work. If it works, what do?
Go for it.
You go for it. That's exactly